What is going on, guys? My name is Richard, and welcome back to another stock market outlook video. As usual, we'll go through the price action of the major indexes, the leading stocks in the market, and we'll also check out how my previous watchlist performed this past week, as well as consult the sentiment surveys I post on Twitter, the IBD Big Picture article, and the GMI Signal from wishingwellblog.com. And at the end of the video, we'll put all these different sources of information together and determine what the current trend of the market is. And then based on that trend, you should decide how aggressive or defensive you want to be in the market next week. So to start things off, let's look at the NASDAQ 100 on a weekly time frame. And overall, we are up 0.22% on the week with a weekly closing range of 74% and a daily closing range this past Friday of 54%. And looking at the weekly bar, you can see we had a nice reversal pattern, and I think this sets us up nicely for another move upward very soon. And from this weekly bar, the expectation is we go sideways or up. And taking a step back, you can see that we are in a clear stage 2 pattern with a price above the rising 10-week moving average and 30-week moving average as well. And looking at the S&P 500, you can see we had a slightly stronger week, which is positive. And overall, we are up 0.64% with a weekly closing range of 75% and a daily closing range on Friday of 66%. I think it's definitely bullish that the S&P 500 is outperforming a little bit at this time because it shows that this rally is kind of spreading out, and overall, that definitely is a good thing. And looking at the weekly bar, the expectation is we go sideways or higher. And looking at the 30-week moving average, you can see we're not quite in a stage 2 uptrend because the 30-week is still decreasing, but it's very close to flattening out. And I think that would be very constructive if it does so. And lastly, looking at the IWM, the Russell 2000 index, you can see we also had a positive week of 0.59%, but we had a pretty negative weekly closing range at 30.9%, but we did have a daily closing range this past Friday of 64.6%. And from this weekly bar, the expectation is we either go sideways or lower. And in terms of station analysis, you can see we're still above a declining 30-week moving average, and I want to see this flatten out and move up and start a stage 2 uptrend. I think that would be very constructive for this bull market. So that's it for the major indexes, and also checking into the Dow Jones. You can see this is very similar to the IWM and also S&P 500. And overall, we had a very strong week up 1.89%, but we are still not quite in a stage 2 uptrend. And looking at GLD gold, you can see we really had a negative week. Overall, we were down 4.33% with a weekly closing range of 25.8% and a daily closing range of 47.1%. And overall, the expectation from this bar is we either go sideways or down. And looking at the VIX, you can see there's another one for the bulls. You can see we're down 0.72% with a weekly closing range of 38.1%. And checking into the financials, you can see we had an up week up 1.37%, but we had a pretty negative weekly closing range at 34.4%, and we're still not in that clear stage 2 uptrend or above this point of resistance right here. And lastly, checking into the FFTY, the Innovator IBD 50 ETF, you can see that overall we had a down week, down 1.06%, but we had a decent weekly closing range of 66.4% on the week and a daily closing range of 37.8%. So the expectation from this weekly bar is we either go sideways or up. So those are the major ETFs, and now let's take it day by day on the QQQ. And starting with this Monday right here, you can see we were down 0.43%, but did had an attempt at an upside reversal. But looking at the next day, you can see it didn't hold, and we had a gap down, and then it closed right near the low of the trading range on a pickup in volume. So this definitely was a very negative day, but the next day, this Wednesday, was about as positive as you can get. Overall, we had a very strong gap up, and that held throughout the day, and we finished right near the top of the trading range, although it was on lower volume than the day before. And then on this Thursday, you can see we tried to move up, but then that didn't hold, and we fell back and closed below the open, which is a negative. And then on this Friday, you can see we had a down day, but overall it was very constructive, and it was on very low volume. And overall, I got the sense from my stocks and the leaders that really not that much trading was actually happening on that day. So that is a day-by-day analysis, and from this bar on Friday, the expectation is we either go sideways or up. And I think it's always important to take a step back and look at these trend channel lines that have been doing a fantastic job of holding this rally. And you can see a bunch of times where we fell below to the bottom of this channel, and we had nice upside reversals here, 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 here. And most recently, after it fell below on Tuesday, we had a nice day on Wednesday, as we discussed. And eventually these trend lines will stop holding this rally because this is a very steep rate of ascent, and it almost reminds me of the uptrend in the 90s and 2000. And honestly, that is going too far too quickly. So we will have corrections along the way during this bull market, and it would be healthy. It will set up new bases in these growth stocks and present new buying opportunities. But at this time, we're still holding this line. And as long as this holds in the 21 EMA, I will be bullish and looking for new opportunities in the leading growth stocks. And speaking of the TMLs, let's go over there and let's sort by the weekly change. All right, so taking a look at the true market leaders, you can see that only a couple were actually green on the week: Tesla, DDOG, SCDG, NVIDIA, and ENPH. And I recently added ENPH and SCDG because the solar sector is leading at this time, and these are the leaders in that group. And looking at Tesla, you can see it broke the downward trend line right here and then moved up quite constructively, but it still isn't quite above this point of resistance right here at about 1680. So we'll see if it can break that early next week. And DDOG is still below the 50-day moving average, although it's trying to make it up there, but so far this is resistance. SCDG is trending higher after an earnings gap up. NVIDIA has been a very strong stock. It didn't sell off as much as the other growth stocks during the rotation and has recovered extremely well. And looking at ENPH, you can see it's right near all-time highs and is consolidating after, once again, an earnings gap up. So those were the leaders this week, and also you have some bad performers. Chegg really broke down, and looking through these, you can see a lot of them are below their 50-day or trying to get above it. And really, I wouldn't trade any of them if they're below the 50-day moving average. I think it's just too high risk. Teladoc still needs time to build this base after the merger news with LVGO. AMD is very strong. You can see that's right at the 10 EMA. Okta, LVGO, Dexcom. And overall, you can see that the damage has been done to a lot of these growth stocks, and they need some time to set up once again, form some flat bases, and then they'll present more buying opportunities. And moving on to my watch list, you can see that Tesla and eBay were the only ones that were green. And overall, once again, you had some failed bounces off the 21 EMA, the 50 SMA, and also pins, which is still just consolidating. So overall, not the best performance, but none of them really broke down too hard. And a lot of them are still, once again, as I said, setting up for another move upwards. They just need more time. And LGH actually had a green dot right near the 21 EMA above the green line, which is a setup that I really like to use. So look out for that one next week. And a lot of these are actually still constructive. You can see Amazon is right below this downward trend line right here. So this is definitely actionable next week if it breaks through this DTL. So that's pretty much it for my watch list. And moving on, we've got the sentiment surveys that I post on Twitter. And overall, you can see that this result was 44% this past Friday. And this is an uptick from the previous week, which was at 40.3%. But this still isn't in the danger area of 50, 55%. So overall, I don't think there's too much to worry about with regards to this sentiment survey. And going over to the put-call ratio, you can see we are still elevated somewhat, but we are trending in the right direction. And that's pretty much it for the sentiment. And moving on, we've got the big picture article. And overall, the headline is the S&P 500 almost hits a new milestone, and new IPOs give this important trading lesson. And reading through, they discuss how the S&P 500 is right near its all-time highs and could move up above that early next week. And they also talk about how this past Friday was technically a distribution day because the Nasdaq fell 0.2% on increased volume versus Thursday, although it didn't really feel like one, so I don't think it's too much to worry about, but it is something to keep note of. And overall, they also discuss how the top performing groups of this past week hailed from the bottom half of the IBD's rankings. So this kind of indicates that the rally is spreading out, and it could indicate that there's rising confidence that the economy will recover from the COVID-19 shutdown. And moving on, they also talk about two different IPOs, RKT and VRM, which got hit pretty hard last week. You can see the chart for VRM right here, where it dropped on volume on this day, which is definitely a big red flag. And this is a reminder that IPOs are much more volatile and definitely more risky than a stock that's been trading for longer. So that's a quick summary, and overall their view is still a confirmed uptrend, and we now have 4 distribution days on the Nasdaq and 3 on the S&P 500. And finally, we've got the GMI Signal from wishmobilepal.com, and it is still green since April 27th of 2020. And looking at the GMI score, it's a very strong 5 out of 6. And we are also very close to the longest short-term uptrend on the QQQ since 2006, so we could break that record very, very soon. So overall, my view is we are still in a confirmed uptrend, but definitely some stocks need time to heal a bit, set up new bases before they break out and resume their uptrends. So keep that in mind, and I hope you guys enjoyed my analysis. If you did, please go ahead and leave a like down below. Subscribe if you're new to the channel. and I'll see you guys in future videos.